Good morning. So in this discussion, I'll be talking about the bookkeeping end-to-end report from journalizing transaction to the preparation of post-closing trial balance. So this one is the updated package already. So we'll be doing the partnership service first. So I'll try my best to record everything in just one video. So you can just pause it whenever you review this session or put it on slow-mo if you feel like I speak fast. And then if not, I will just be creating a part 2 video for this work-related project. So it's GAAP accounting services. So of course, when you attend a national assessment, of course, we have to read the problem first. So here are the source documents that you will be cutting out. So you will receive an actual paper in your national assessment date. So you have to cut out everything. Okay, once you're done, okay, you have to read the problem. Yeah, well, technically, I would recommend to read the problem first before doing anything else. So in this problem, we have the GAAP. So introduction. In January 2019, George Abbott and Andy Perez formed a partnership business named GAAP Accounting Services with initial capital contributions of 200,000 pesos each and agreed to share profits and losses equally. So those are the important informations. GAAP Accounting is a non-VAT registered entity engaged in rendering professional accounting services and prepares its financial statements on a monthly basis. So below is the firm's post-closing trial balance for October 2020. So please be careful that these balances reflect the ending balances of October, okay, as stated here. So meaning these are the accounts or the amounts that we have in our books as of October 2020. Now, this will be the same amounts that we will be using in the beginning balances for the month of the next month, which is November 2020. And now we have the chart of accounts. Chart of accounts, as we've discussed, these are the summary or the list of the accounts that we have in the books in our business. So we have the assets here, the liabilities, the equity related accounts, the revenue, and then the expenses. And you have to read as well the additional information here. The partnerships policy. Okay, so it includes number one, the entity uses special journals to record service revenues, cash receipts, and cash disbursement in addition to the general journal. It also maintains subsidiary ledgers for its customers. So we have revenue journal, cash receipt journal, cash disbursement journal, and GJ, our general journal. Number two, we have the depreciation on office equipment, which is, it says here 10% per annum based on the equipment balance. Number three is the purchases of supplies, which are immediately charged to expense. And lastly, number four, percentage tax, which is accrued monthly at 3% of service revenue. So once you're done reading the entire package or entire problem, you can now proceed with cutting out all the source documents. So we have the checks here, official receipts, statement of accounts, payment slips, payroll summaries, ORs or official receipts again, check vouchers, and invoices. Okay, so once you're done with cutting out all the source documents, you have to arrange everything by date. So once you've been able to arrange all the source documents by date, you can now proceed in arranging it per transaction. So you have to collate or consolidate all the source documents related to each other. Okay, and then after doing that, you may now arrange it by series. So it's going to be 3-stage or 3-phasing arrangement. You have to arrange it by date, per transaction, and per series. So per series, it means that you have to put it all in lineup properly. So 91005 goes before 91006, and 91006 goes before 91007. So that's how we arrange it by series. You have to check the series numbers of the check number, check voucher, or the official receipt number. So once you're done arranging everything, we have to input or encode all the balances here in our general ledger. So let's see. Okay, let's just check the general ledger here. So this is how it looks like. Okay. So it has the name of the company here, the name of the file. So this one is the general ledger, and you have to put the date. Okay, so these are the accounts coming from the, okay, let me show you where it comes from. So it all comes from the list of the chart of accounts of the GAAP company. So if you'll notice, we have 101 cash, so on and so forth. So those are the same details that we have here. Cash 101, okay, it's already listed or reflected in the template to be provided by your TESDA assessor. But of course, without all this answers, because it's already a complete project, okay? So how are you going to reflect all the balances here? So our technique here is to go each account one by one in chronological order. Okay, so we have 101, then proceed with AR, 103, and then proceed with 108, input VAT, 120, office equipment, so on and so forth, until you were able to reflect all these balances here. So how are you going to do that? Let us first start with cash, of course. Debit, 255,000. So in here, let me put, let me just highlight it in a different color so that we know we were able to record everything. Okay, so yellow. We have November 1. What date are we going to use when we're recording the beginning balances? For all of this, we'll be using the date, the first date of the month that we are recording. So in this case, November. So first date is November 1 because that's the beginning balance. If you'll notice, these are the ending balances of October, right? So this will be the beginning balance of November. So that's going to be November 1. And we have to put a particular here or a definition under this item column. So in this case, we put beginning balance, but you can actually put there beg. So that means that it's a shortcut for beginning. You can also use the word bal for the word balance, or you can just put the entire word there. It really depends on you. But since the assessment will take 5 hours and 40 minutes, if I'm not mistaken, much better if you could put almost everything in shortcut, but the context is still there. So for the beginning balance, we have 255,000 pesos. So again, for the peso sign, we only put or use peso sign at the first entry. So do not copy this one. Okay. Please disregard the peso signs here. Okay. Next, we have 103 accounts receivable, 115,000 pesos. So 103 AR. So 115,000 pesos. And then we'll just go through each accounts. 120, where's the 120 here? Okay, office equipment, 210. Okay, beginning balance, don't forget date, peso sign, and then the description. Next, accumulated depreciation office equipment. Now we are recording the credit balances. So let's go to 121. So here's the 121. Account title is accumulated depreciation for the office equipment. So we will record it on the credit side. So now if you will notice, the 17,500 is on the credit side. Now, when we go to the general ledger, make sure that all the accounts that are under credit side have their parentheses. This is for us to determine that this account has a running balance or a balance on the credit side. Because if you'll notice, we have two different columns here, one for debit, one for credit. So how would we know that if the balance are in debit or in credit? So for us to know that, and for us to determine, we have to put a symbol or a mark or anything. So we put parentheses. So that symbolizes that this balance is on the credit side. Okay, I hope that's clear. Next, moving on to withholding payables tax 202, withholding payables amounting to 800 pesos. So yeah, just the same thing. Okay, I'll highlight it in yellow. Okay, November 1, don't forget the date, beginning balance, and of course the amount here is 800. It has a parenthesis again because it's on the credit side. If you will notice, the ones in the debit side, we didn't put any parenthesis here, right? Okay, please do not mind the other transactions here yet because it will be discussed along the way. Right now, I'm teaching you the step-by-step, okay, on how you will answer the national assessment. Okay, although the amounts here will be different, the name of the company will be different when you attend your assessment, of course, but the process is just the same. Okay, do not forget to disregard first the rest of the transactions here because again, this is already a complete answer for this problem, for this work-related project. Okay, okay, so let's go back. Okay, we have, after 202, we have 203, expanded withholding. Okay, let me just put it on split screen. So for expanded withholding, we have how much? 500 pesos. So in this case, we have beginning balance of 500 pesos. Next, we have SSS payable, 5,550. Account number is 204. This one, 204. Utilities payable, 205. Beginning balance, 3,800. So same here, that's 3,800. 206. Beginning balance is 6,750 pesos. Here, so 206. Okay, this one is accrued payable. At utilities payable, we have 3,800. Okay, and then accrued payable, we have 6,750 on the credit side again. And then 301 capital, 301, we have the beginning balance of 272,550 pesos. Now, if I'm speaking too fast, class, please feel free to put this video in slow-mo so that you could, follow if you prefer it that way. Okay, next we have 302. So A Pares Capital beginning balance is 272,550 pesos. So we have to make sure that we were able to post everything here in the ending balances. Okay, because that will be our beginning balances. Now, let me just remind you to please remove the name of the months here. So we only use the word November or the entire word of the month. Let's say we're recording for December. So we have to put December 1 or DEC 1 or DEC 1. Okay, for the rest of the transaction following that, we'll only put December 30, the date itself. 2, 3, 4, 5, not the word December. But in this case, please disregard this. Let's follow the format. We'll just use the dates, actual dates here, 30. Okay, we will apply this for the rest of the transactions. Okay, just like this one. Once you're done with posting all the beginning balances for the month of November, we can now proceed in journalizing transaction. But before we do that, we have to check if we were able to arrange all the source documents by date, by transaction, and then by series. So now I have a prepared and arranged source documents here in the file. Okay, I was able to arrange it by date already. Just look at the dates here above. Okay, it's in chronological order. Once I'm done with arranging it by date, I can now proceed in arranging it by transaction. So by that, what I meant was I have to consolidate all the source documents that are related to each other. So how am I supposed to know that? So you'll know that if you check the source documents and they have the same amounts, same details, same date, same name of the client or the suppliers. So in this case, it's just a standalone source document. There's no other source document attached to it. So we can proceed on that on the next source document. So if you will notice here, all are November 3 rather, November 3. The amounts are just the same, 1,680, 1,680, 1,680. And then if you will notice, the check was paid. This one is a check, right? This one was paid to Unique Bookstore. The check voucher is prepared for the Unique Bookstore as well. And this OR has been issued to us by the Unique Bookstore. So that means this is recorded as one transaction only. Okay, so that's how we will arrange it. Okay, next, let's check the other source documents. Okay, it's just the same. Majority in the assessment package are including transactions with one OR, official receipt, one check voucher or CV, and one check. Okay, we also have, let me just check the other source documents here. Instead of an official receipt, they use payment slip because payment slip has been issued by banks to where we pay our withholding or expanded withholding taxes, okay, to the BIR. So it is considered as an official receipt as well from the bank, proving that we paid already or we paid something to them. Okay. Let me just check the other source documents here. Okay, payroll summary. So we have the check voucher also, check, and then the payroll summary. This reflect all the details. How much did we pay our employees? Okay, it's not an official receipt because when we pay our employees, they don't, issue an OR to us. So as a supporting document, we use the payroll summary. So yeah, I think we're good to go. Once you're done arranging it by date, by transaction, we were able to staple everything. Don't forget to staple it. Okay. We can now proceed in arranging it by series. So if you will notice, okay, in this case, we don't have other invoice that has an invoice number 6002. So we can just proceed to the next or to the other dates. So if you will notice here under November 4, it's a standalone, and the date after that is November 5. If you will notice, there's a series number for the OR. So that's 2001, and then the other OR comes after, which has a reference number of OR number 2002. So that's how we arrange it by series. So once you were done doing everything in all the source documents, you can now journalize transactions. And for me, you really have to be careful in recording it. What journal are we going to use? You have to know if it's going to be recorded in revenue journal, if it's recorded in cash receipt journal, or we'll call it CRJ, CDJ for cash disbursement journal, and then GJ for general journal. And then, of course, RJ for revenue journal. Again, just a quick review. When we say revenue journal, this is a journal. It's a special journal where we record the invoices that we issue to the client because that invoice pertains to the revenue we rendered to the client, but their payment hasn't been collected yet. So it's going to be collected in a few, maybe weeks, months, I don't know. It depends. But the context here is if the client is not yet paid for the service we provided to them, we will record it in the revenue journal. Next, cash receipt journal. This is where we record all the payments that we receive. Okay, if you know that the source documents proved that we received a cash from the client, okay, a refund from supplier, okay, as long as there's a cash received on our end, it will automatically be recorded in CRJ. Now it's the opposite context in CDJ. When we issue check, definitely our cash in back or cash will be deducted, right? So all the payments that we made should be recorded in CDJ. The rest of the transactions that are not here can be recorded in the general journal. So we use GJ usually for adjustments, adjusting entries, and closing entries. So that's how we analyze these journals. Okay, in this case, we'll start with November 3, of course, invoice 6001. So in this case, this invoice was issued to our client. By the way, before I proceed, I'll just give you a heads up that an AR subsidiary ledger will also be provided to you. Okay, it looks like this. Now, if you look at the Excel file, it looks like, okay, where's the AR? Okay, I think it's here. Here we go. So TESDA will be providing you this AR subsidiary ledger. And then do not be confused because there would be a given, it's already given, beginning balance. Usually it's two clients that TESDA will give beginning balances for the project or for the problem. Don't be confused. Take it as is. If TESDA provided you, okay, here's the balances for credible company. Here's the balance of precise corporation. Take it as is. Do not delete it. Okay. Do not cross strike through it. Okay. So again, just a quick review. AR subsidiary ledger contains all the list of the clients who hasn't paid us yet. Okay. So now let's go back in journalizing transaction. Let me go to the source document. So how are we going to record this? Okay, let me just open a new worksheet here. Okay. So on my left side, we'll be reflecting the source document. And then on the right side, we'll be opening up the corresponding revenue journal. Or, I mean, corresponding journals. So in this case, we issued an invoice to our client. So in this case, we record a revenue. Okay. We rendered our service for a client named Reliable Corporation, but they haven't paid us yet. So in this case, we will record it in what journal? Revenue, CRJ, CDJ, or GJ. So definitely we'll record it in RJ. So we'll record it here. So where is the transaction? It's here. November 3, we'll just have to put all the details reflected here. So the date is November 3, then we put November 3. Invoice number is 6001, it's also here. The name of the client is Reliable Corporation, so we just put it here. And then when we record in revenue journal, the normal transaction here is debit, AR, or accounts receivable, 50,000 pesos, and then credit, service revenue. You have to make sure that everything is balanced. When you record a 1 million in debit, it should be 1 million as well in the credit side. So it's always have to be balanced. So in this case, we have 50,000 pesos. So we just put 50,000 pesos here, 50,000 pesos here. And for the peso sign, of course, this is the first entry. So we'll use the peso sign on each. Okay, next. All right. So once you're done recording this, you can now proceed to the next source document. So based on our arrangement, we have this one. Okay. We already know that these are all included or related to each other. So it's just going to be one transaction only. We'll only record it as one. Okay. In this case, we issued a check. So we prepared a check voucher and then a supplier, unique bookstore issued the OR or official receipt. So in this case, the context here was we paid unique bookstore amounting to 1,680 pesos on November 3. Okay. And then we have to record it in what journal. So in this case, since we paid something, we release the cash, we release the check, it's a deduction to our bank accounts. It should be recorded in the cash disbursement journal. So CDJ. So let me go over the CDJ here. So we'll record it. Okay, November 3. So we put the date here. Check voucher is also here. Check voucher number is 91001. Check number is here as well. So you can check the check number on the actual check, which is 421001 also. But please take note the check number is different to the check voucher number. Please be careful on that because it's going to be a deduction if you have a mistake here. So paid to accounts debited. So who did we pay this check for? So unique bookstore, you have to put here unique bookstore. And then what's the amount? So when we paid, what did we pay for? So it's for the office supplies and then the VAT. So if you will remember, let's go back to the problem. There's an additional information there. All the purchases of supplies are immediately charged to expense. So debit supplies expense. So here it is, 1,500. It's already breakdown in the official receipt and the check voucher. You just really have to copy paste everything. So 1,500 for supplies expense, and then that's gonna be on the debit side. Another debit account is the VAT or 12% VAT. So 12% of 1.5 is 108.50. 180 pesos. But don't forget because don't be confused because it's already reflected here. You don't have to compute it. It will be a given amount already. So you just have to copy paste it here. So since you debited 1.5 and then 180, so you have a total of 1,680 pesos. Now, if you have a debit side 1,680, so your credit side should be the same 1,680. So the transaction was debit, supplies expense, debit input VAT, credit, cash 1,680 pesos. So I hope that is clear. So we'll just have to do the same things all over the rest of the document. So let's see. Okay, no more for November 3. We'll proceed to November 4. Okay, so this one, November 4, what happened here? So we issued an official receipt to our client, Precise Corporation, for the invoice 3110 amounting to 40,000. So if we issue a receipt to our client, that means they paid us. They settled their liability to us. So if we were able to receive a payment, so where should we record that? We record it in the CRJ. So we record it here in cash receipt journal. So here's the cash receipt journal. So we'll record it as is. So put all the details needed. November 4 is here. OR number is here, 21001. Invoice number is here. And then receive from what client or account credited. So it's from the payment from Precise Corporation. So we receive cash from Precise Corporation. So now when we're recording in cash receipt journal, there's a standard transaction. So debit, of course, what did we receive? Cash amounting to 40,000 pesos. And then what will be our credit account? Should it be AR or accounts receivable or service income credit? So for us to know which one of the two, check the invoice. Okay, if we have previously issued an invoice to the client, that means that's an accounts receivable. Previously, they haven't paid us, but now they're paying us. So it should be credit accounts receivable. Okay, so this is the entry here. Now, uh, please be reminded that whenever we record an amount here in the AR, we also have to update the AR subsidiary ledger. So in this case, we'll go over the Precise Corporation. Where's the record here? So for Precise Corporation, it is already given by TESDA that we have a balance. They have a balance to us. November 1, they have to pay us amounting to 40,000 pesos. But now, since November 4, they have paid us with an exact amount of their balance, so 40,000 pesos. So where did we record that? In CRJ page 1. Okay, so let's check it here if we match with the records. So we credited here. It's credited accounts receivable credit. Okay, 40,000 pesos. Now, if we will be updating this record, Precise Corporation, the date is November 4. Where did we record this? This one means post reference. It's an indication or a reminder for us to check which record or book did we put this amount. So in this case, we recorded it in the cash receipt journal. So in this case, we use the shortcut CRJ because it's going to take you a lot of time if you will put the entire amount. I mean, entire name of the journal. So we just use short term. So CRJ page 1. So you said you credited an AR, so 40,000 pesos. So you put 40,000 pesos here on the credit side, not on the debit side. Okay. So if the client has a balance of 40,000 pesos, and the normal balance of the AR is debit, right? So when we credit something, we deduct the amount. So 40,000 minus 40,000, that equals to 0. So I'll highlight this one. So for us to be reminded, we're done with it. Next, November 5, another OR that we issued for Truthful Corporation. November 5, so we will record it in CRJ because we received the payment, right? So date is November 5, but in this case, again, we will only put the whole name of the month on the first transaction. The rest will only be using the date itself. So in this case, November 5, OR number is 2002 2002. COD, why do we have COD here and not an invoice number? Because it reflects here that there's no invoice previously issued, meaning it's a COD, cash upon delivery. So when we rendered the service last November 5, they already paid us. So we input here. If you did not see any invoice number here, you encode COD. That means cash on delivery. So name of the client is Truthful Corporation. Here it is. And then the amount are 20,000 cash debit because we receive cash. So that's debit side 20,000 pesos. And then since we did not issue them an invoice, there's no receivable from my side. So it's already credited to the service income. So debit 20,000, credit 20,000 for service income and cash. So are we balanced? So yes. So let me just highlight this one in yellow also. Now we can proceed here. So this one, okay. So we noticed that everything is on the similar amount. So we will record it as one as well. So in this case, we paid Computer Corner, 16,800, 16,800 here. They issued us the official receipt. So in this case, they should be recorded in what journal? So CDJ. So we have to put all the details again. November 5 rather. Check voucher number is 91002. Check number is 421 00002. And to whom did we pay this check? Computer Corner. So you put Computer Corner here. Now, in this scenario, if you will look at the cash disbursement journal, there are only specific accounts reflected on the column heading. Not all the accounts here are reflected here. So if in case that you did not see the account title here, you will record it in the sundry debit account. So in this case, what did we debited? It's office equipment, right? We paid for a computer. So that's part of our office equipment. So if we will check each column here, do we have office equipment? So in this case, none. So we'll just have to put the amount here under sundry debit, but you have to include the post reference as well. So in this case, this one is debit office equipment amounting to 15,000 pesos. We use the 120 as post references. And then since we debited 15,000 pesos, okay, that's debit. Credit is 16,800. Why? Because when you check the breakdown here, if there's a VAT included. So whenever we purchase something, it should be VAT inclusive. So So it's already reflected there, 1,800. It's here also, 1,800 pesos plus 15,000. Why? Because it's on the debit side. 50,000 pesos plus 1,800, so that equals to 16,800 credit. So are we balanced? Yes, debit 16,800, credit 16,800 pesos. So I'll highlight this one. So marking this as a complete transaction. Next, we'll proceed with the payment again. We receive, no, we did not receive, we issued a check, so it's a deduction to our bank. So in this case, we will record it in the CDJ as well. So I'll highlight this. So it's just the same here. November 5, 91003. Here, check voucher number, 91003. Check number is here also. And then who did we pay for? Rumi Offices Incorporated. And then in this transaction, what did we pay? We paid for the rent expense. Okay. And then we have a liability of to be paid the next month. Liability amounting to 500 pesos. So in this scenario, ma'am, question, why do we have the parentheses here? It's an indication that it's a payable or a liability account. If you will notice here in the CDJ, okay, debit rent expense, right? Because we're paying for the rent. So debit rent expense. So let's check here if we have a rent expense account. If none, again, we'll put it here on the sundry debit. So in this case, we have inputted everything here, all the details. Amount is 10,000 pesos. Let's see the breakdown. 10,000 pesos. What's the account number or post reference number of rent expense? So 505. So we use 505 here. And then what about expanded withholding tax? And then what about the parentheses? So it should be recorded here. It says expanded. Take a look at the amounts here. I mean the column header, withholding tax, and then we have the expanded withholding tax payable. If you will notice, there's a debit or credit side. So for us to know if we should record it with parentheses or not, check the check voucher. So if it's recorded with parentheses, we also have to record it here with parentheses. So that means it's on the credit side. So let's see if it matches the records, and then we receive 9,500 cash. So in this case, we release 9,500 cash as well. So let me just highlight this in yellow. So debit 10,000 pesos. That's on the debit side. Our rebalance, we credited 500 pesos. Okay, credits because we have the parentheses, and then another credit amounting to 9,500 pesos. Are we still balanced? We have 95 plus 500 for the credit side, and then 10,000 on the debit. So of course, we're balanced. Okay, so please be careful on the parentheses here. Next, we have November 8th. Before November 8th, so it says here we issued an invoice. So meaning we rendered the service to our client. Excuse me. And then they haven't paid us yet. So in this case, we will record it again in the revenue journal. So in the revenue journal, okay, we record it here, November 8th. Okay, invoice number is 6002. We the client's name is Relevant Corporation, and then debit AR because they haven't paid us yet. If they did, it should be cash and it should be recorded here. But in this case, it's not. It's not yet paid. So it's still a receivable from the client. So amounting to 100,000 pesos. Amount is here. And then credit, of course, service revenue for us to record our revenue rendered. Okay, next we have November 10th. So in this case, we also have the similar transactions. So 131313 dates are the same. November 10, November 10, November 10. So BAR, BAR, BAR. So it's just one transaction. So in this case, we record it in the CDJ again. It's a disbursement. So it's this one, put the date here, the check voucher, and then the check numbers is here as well. Then you put the name to whom did we pay this client. So in this case, what is the transaction? What has been the transaction here? We paid for. Okay, take a look at this. Earlier we have expanded withholding, but it's on the credit side because it has a parenthesis, right? In this case, it's on the debit side. So how do we record this? It's already in the breakdown. Just read withholding tax and expanded withholding tax. So where's the withholding tax here? It's here. How much? 800. So 800 without the parentheses. Because take a look at the voucher, check voucher. Do you have a parenthesis there or not? Okay, do not assume anything, huh? So yeah, we have 800 debit and then another 500 pesos debited for expanded withholding tax. So if we have a debit 800 plus 500, we should credit 1,300 for us to balance. Okay, it's just the same here, same amount here. Next, we have paid for the SSS. Oops. Now, in this transaction, we paid for how much? We paid for SSS, PhilHealth, and Pag-ibig. It's on the debit side again. Okay, in this case, we have to sum up everything. So just compute for the total. So November 10, check voucher number is 91005, and then check numbers here. Who did we pay for? SSS, PhilHealth, and Pag-ibig. So let's take a look at the columns. Do we have SSS, PhilHealth, and Pag-ibig? Yes. So we will record it here. Without parentheses, because it says here it has no parentheses. So the only time you will see here the parentheses, you will also encode it or include it here with parentheses as is. In this case, there's none, so it's on the debit side without the parentheses, and then credit 5,550, which matches the amount of the check we issued. Okay, it's all balanced. Next is we paid for water consumption. So water consumption for the month of October. Remember, we are recording for November, right? So this has been a payable from the last month, from the previous month. So let's say, okay, November 10. So 91006. By the way, you will know that you are recording it correctly if the series here and the check voucher number, even the dates and the check numbers are in a chronological order. Okay, that's your sign. Oh, I've already got the correct flow of the transaction. Okay, going back. So to whom did we pay this check? H2O Corporation, amounting to 800 pesos. Why is it here again? Because you have to check first if we have utility expense here, or utility payable, because it's a payable from the previous month. Do you have a utility here? None. So again, if it's none, we have to put it here on the sundry debit, so amounting to 800 pesos. The utility payable post references is 205. 205. So how do we know that it's a payable or an expense? So if you notice, the month is October, so that's the previous month. So previously it has been a payable already. So we have to um reduce our liability. So in this case, we have to debit the utility payable. Since we debited 800, we also have to credit cash. Okay, next. We also paid for the electricity, not just for the water. So for the electricity, it's just same amount, or I mean the date is okay, November 10. Check voucher number, check numbers here. Okay, name of the supplier, okay, Bolt Electric Corporation, amounting to 3,000 pesos. So we debit utilities payable again because this is a payable from the previous month. So 3,000 pesos and then 3,000 pesos cash. So debit, okay, debit 3,000 pesos, utilities payable, this one, and then credit cash because we release a check. So deduction to our bank account. Next. For November 15, we issued an official receipt to Credible Corporation. So meaning we received a payment here from the client. So we'll record it in the CRJ. So CRJ is here, cash receipt. There you go. So record it as is, Reliable corporation. Oops, did we record this reliable corporation before? Let me just check. It should be reliable corporation first before credible corp. Let me just check if we have overlooked a statement of account here. Okay, we got precise. We got truthful corporation. Official receipt. Roomy. Okay, we have relevant. Hold on. It should, okay, invoice. Okay. RJ, relevant company. Okay. Next. November 10 is for BAR, payment slip. Official receipt for H2, H2O, both electric. Okay. It should be, okay, so it's just here, ayan, overlook lang. So it's only typographical error. If you will see in the source document, it says here that it's dated September 10, but it should be November 10. So we have to record this. So since this is official receipt, tayo ang nag-issue. Don't be confused. Para din malalaman kung kanino galing yung official receipt o sino nag-issue. So, we base it on the company above, okay, on the top. So, GAAP Accounting Services. So, it means this is our OR that we issued to our client Reliable Corporation amounting to 50,000 pesos for the invoice 6,001. So, we'll record this in the cash receipt book because the client was the one who paid us, not us. So meaning we are not the one who paid somebody else, it's the client who paid us. So we record it here in the CRJ, cash receipt journal, and then just the same details. So we get the date, November 10, so that's 10-2003, OR number for the invoice 6001. The payment came from the Reliable Company, so Reliable Corp, amounting to 50,000 pesos. Debit cash because we received cash, right? And then credit accounts receivable because previously we issued them an invoice, meaning we rendered the service before, but they haven't paid us yet. So we have to credit the accounts receivable. So let me just highlight this one. Okay, but since we have recorded something here in the accounts receivable, we also have to update the accounts receivable ledger. It's here. So for the accounts receivable ledger, Reliable Corporation, we look for it. So in this one, okay, we record the same details. November 3, okay, we recorded in the revenue journal. Okay, earlier we recorded here, but we forgot to update it. Okay, here you go. And then for the accounts receivable, we debited 50,000 pesos. Correct? So it's this one. November 3, we recorded in RJ1, Revenue Journal page 1, we debited 50,000 pesos AR. And then the balance now is 50,000 pesos. But this time, we recorded a transaction in CRJ, November 10, right? So November 10. And then here, we recorded in CRJ, page 1, and then we credited the accounts receivable, 50,000 pesos. So we have to record it here on the credit side. But the balance now should be 0. So from the balance, AR, normal balance of AR is debit, right? But when we credit it, we deduct the same amount. So 50 minus 50, that equals to 0. So don't forget to update always the subsidiary ledger or AR ledger so that we have the updated balances per client. Next, let's proceed on November 15. So November 15, okay, we issued a receipt again to Credible Corporation November 15. So we will record this to CRJ because we are the one who received the payment. So on our point of view, a debit cash, right? So November 15 is here, date, OR number, invoice number, name of the client, what is the amount? 75,000. Debit, we received something, we received cash, 75,000 pesos. Credit, accounts receivable, because initially we invoiced them. So 75,000 pesos, debit and credit. Let's highlight this one. So we know we recorded it already. For the AR, of course, we have to update it as well. Credible Corporation, we have here. So since they have a beginning balance, it's given by the TESDA already. So we record November 15 on the CRJ. Here, we recorded in CRJ, right? November 15, based on the source document, amounting to 75,000 pesos. What we did was we credited accounts receivable here, 75,000 under credit accounts receivable. Now we have to credit this one out as well. So if we have a balance of debit, because the normal balance of AR is debit, and then we credit 75,000 pesos also, 75 minus 75 equals 0. Okay, see, you have to update it every time you will record something here under AR credit. AR stands for accounts receivable. Next, we have this one. Okay, November 15, we have payroll summary. We issued the check, the cash, because we don't have to break down. We don't have to break down any more the employee names. It's a lot. So we just put cash here as per TESDA's template. So we record this one in the cash disbursement. So it's a cash disbursement. It's here. Okay, November 15. Just put the date. For me personally, I will just use the check voucher because it contains all the details already. So the date here is 15. Check voucher is here already. Check number. And to whom did we pay this? Cash. We just copy it here. And then for the, what is the transaction here? We paid for the payroll. So that's a salary expense, right? And then we paid, we have a liability. We haven't paid this yet. That it's still a liability. It's a payable account because there's a parenthesis, right? Just like what I have mentioned earlier. 750 for PhilHealth, Pag-ibig's 200 pesos. So for the salaries expense, we have it here on the top. So we can just type it in here, 24,000 pesos. But for PhilHealth and Pag-ibig, since it's just consolidated in one column or one column here. So we'll just add it 750 for the PhilHealth and then 200 for the Pag-ibig contribution. So it's a payable account, so it should be credited. So 950 in total, 750 plus 200 is 950. So that's on the credit side. Now, if you debited salaries expense and then you credited 950 pesos, what's going to be your credit cash? So how much is your, you should check. So 23,050 pesos. So 23,050 pesos plus 950 pesos is equals to 24,000 pesos. So debit 24, credit 950, and then credit 23,050 pesos. So yeah, let me just highlight this one again, and then we'll proceed on the next source of documents. I think we have November 20. So again, we issued an invoice to the client named Clear Incorporated. So for Clear Incorporated, since this is an invoice, so we record this in the revenue journal or RJ because we haven't received the payment yet from Clear Incorporated. Amount is to 70,000 pesos. So November 20 date. So invoice number, name of the client, amount is 70,000 pesos. So it's just two columns here. So 70 accounts receivable and then 70 service revenue credit. So let me just highlight this one so we know we recorded it already. Okay. So we're now done with the accounts with the revenue journal. Let's see if what we have here left. November 25, we have received a payment. How do I know about it? Because we are the one who issued the OR, right? Just like in the real life scenario. the one who issued the receipt is the one who received the payment. Just like when you go to the convenience store or cinema, when you pay something, okay, they will issue you an official receipt, right? Because you paid them. So on their part, they are the ones who receive the payment. So in this case, we are the one who issued the OR. So that means we receive the payment. Okay, I keep on reiterating that one so you will get it. So we record this one in CRJ, cash receipt, because we received the payment. Okay, we just copy the details, 225 or number, invoice numbers here, name of the client, amounting to 100,000 pesos. So how do we record this? Cash debit 100,000 pesos. Previously, it was invoice. So meaning previously, it's a receivable. Okay, so credit 100,000 pesos. So again, since we recorded under AR, we also have to update the AR subsidiary ledger. So let me just highlight this one so we can say that we were already recorded this one. So let's go to the AR subsidiary ledger and go to the client's profile. Relevant corporation is here. Okay, so initially we recorded in the RJ, November 8th. Let us check. November 8th, relevant. Okay, I forgot to highlight this one, but you always have to update this. Okay, November 8th, we recorded in RJ1, 100,000 pesos. So let's check that one. November 8th, relevant corporation, we debited AR. So we have a debit here. So this time, we recorded in cash receipt, and then we credited the AR amounting to 100,000 pesos. So we updated here. Date is November 25. Okay, we recorded where? In CRJ, right? And then we credited AR. So since the normal balance of AR again is 100 is debit, so we have a balance of 100 pesos. We credited, so we have to deduct 100 minus 100 equals 0. So that's how it goes. Next, we have November 30. So in this case, we will record this in a CDJ, right? We pay the employees again for their November 30, 16 to 30 payroll. So we will record it here in CDJ. Same scenario. Date is 30. Okay, use the last date here. November 30 here. So check voucher numbers here. Again, my favorite part here is looking at the check voucher because it already has the complete details. So 91009, check number, we paid it to cash, and then the breakdown is here already. Payroll, how much is it? So 24,000 pesos. But take a look at this class. We have SSS 1,100 and withholding taxes. So earlier we record in SSS and PhilHealth. That's why we consolidate or we sum up the amounts. But in this case, it should be separated. SSS should be recorded here in this column on the credit side because there's a parenthesis here. You just have to copy paste everything. So 1,100 here on this column, and then another record of 800 pesos with parenthesis for the withholding tax. Withholding tax is here, 800 pesos. So both of these are under the credit side. So if you debited 24,000 and you have a record of 1,100 plus 800, so that's 19 on the credit side. What's the difference? 24 minus 19. So the difference is this one. The actual payment you provided to your employees, 22,100 pesos, credit, cash. So let us highlight this transaction so we can proceed to the next one. In this case, in this scenario, we paid George Abad. So that means he, as one of the partners of this company, he withdrawn 10,000 pesos. So of course, if we deduct an amount in our bank account, we record it in the cash disbursement, regardless of the reason. As long as there has been a deduction to our bank account, it should be recorded here in the CDJ. So in this case, let's just copy the details. So November 30. So you have 30 here. Check voucher number, check number, name of the payee was paid to George Abad. And then, since this is a withdrawal, we debit withdrawal or George Abad withdrawal. So we notice that it's not here on the column, right? There's no withdrawal account here. So again, if it's not here, we record it under the sundry debit account. Okay, so let's take a look at the account number because we have to put the post reference here. So let's look for G Abad drawing. So that means we use 303. So 303, 10,000 pesos because that's the amount he withdrew. So 10,000 pesos, debit withdrawal, and then credit cash. So debit 10,000, credit cash. So ito, here. So let me just highlight this more. So we're done here. Next is another withdrawal for Andy Paras, the second partner of this business. So it's just the same case. November 30. Check voucher number is here. Check number, Andy Paras, the name of the payee, and then the account number. Again, it's not here on the column header. There's no withdrawal account here, so we record it here in the sundry debit amounting to 10,000 pesos, but we have to get the post reference first or account number. So in this case, Andy Paras, so E Paras drawing 304. So we use 304 here, debit, withdrawal, and then credit cash. So we're still balanced, right? Let me just highlight this one. So meaning we've already recorded everything here in the cash disbursement. But still we have another set of source documents here. In this case, we received it December 5. But if you will notice, based on the particulars, we have incurred a water expense. Okay, we have a payable, which means we have to pay H2O Corporation. They are the ones who are providing our water, okay, for our water consumption. So since this is an expense incurred in the month of November, it should be recorded in our November books. So where do we record this? If this is not recorded in revenue journal, not in cash receipt journal, not in cash disbursement, because if you will notice, we haven't issued the check voucher yet. There's no check yet. So it's still a transaction that we have to record to the book that, oh, we have a liability for the water or H2O Corporation. So we record it in the GJ or General Journal. Let me just change this one. GJ1. Okay. So in this case, we put the date, the last date of the month. So we are recording in November, right? So the last date of November is 30. So we put November 30 instead of December 5. Take note of that. So how do we record it? So since we incurred an expense, a water expense, so that is a utility account, right? That's a utility. The electricity, the Wi-Fi or connection, and then the water. So those are utility expense of the company. It's a common term in the accounting. So we debited utilities expense and we credit utilities payable because it's a utility that should be paid for the next month. It's still a payable on our end. We haven't issued the cash yet. So in this case, debit utilities expense amounting to 500 pesos. Okay, don't forget the PR because the PR of the utilities expense is here, 506. So you use 506 here. Don't forget, you have to complete everything here. When you record on the debit and credit side, you have to reflect their corresponding PRs or account numbers. In this case, utilities payable, credit 500 pesos. So utilities payable is here 205. 205. So we copy it here. And you have to make or compose your own statement explaining the scenario. You can just put here to record water consumption. Or you can just use this to record accrued water expense. That's fine. As long as you have the definition on what happened to this transaction. Okay? Next. Since this is a blank source document, we no longer have to record it. Okay? Next, we have Volt Electric Corporation. December 7 rather. So it's a statement of account for the electricity that we incurred for the month of November. So it should be recorded as well in the books, right? November 30, again, because that's the last date of the current month we are recording for November. So 2,000 pesos. Again, this one is a utility expense of the company. It's a common term, right? So debit utility expense, credit payable, and then we have the explanation. To record accrued electricity expense amounting to 22,000 pesos, debit and credit. But take note of the peso sign. Please remove it in your national assessment. Okay? Only the first transaction will have the peso sign. The rest, it shouldn't have containing peso signs. So for the utilities expense, just the same, 506. And then utilities payable, 205. It's just the same here. 205, 506. Next. Okay, we have the December 10 transaction. We prepared the check December 10, but on the month of November, we haven't issued this yet. You notice we haven't issued the check voucher yet. There's no OR received on our end, so meaning we haven't paid this. We just literally prepared the check for this payment, but we haven't issued it. So meaning we haven't paid this yet. So it's not yet deducted in our bank account. So in this case, for as per TESDA's point of view, this is just for us to record the liability on our part. So we have to record it on November 30 again, date, and then SSS PhilHealth Pag-ibig contribution. This one is an expense account, and then that's on the debit side. Credit SSS PhilHealth Pag-ibig contributions payable. So if you will notice, we record the expense here and then the liability account here. So for the explanation, we can put here to record accrued expense or to record SSS payable, okay, etc. So amount to 3,500 pesos, 3,500 pesos. Okay, for the account numbers, it's all here, 502, SSS contribution, that's an expense account, and then 204 for SSS payable here. But this is not where we stop because we still have to record 2 entries, a total of 5 entries for general journal page 1. So how do we get that? So for the fourth transaction, we get it here. So here in number 2 item, depreciation on office equipment is 10% per annum based on the equipment balance. So we have to record the depreciation expense. So how do we get that? Debit depreciation expense, credit accumulated depreciation office equipment. It's all here. Depreciation 520 here, 520. Accumulated depreciation is 121. So amounting to, how do we get this? You will have to compute for this one. Again, it is 10% per annum, so meaning it's for the 12 months, for the whole year. So we have to get the monthly depreciation expense. It is based on the equipment balance. How do we get or check the equipment balance? We check the general ledger and then the CDJ. Why? Because in general ledger, if you will remember, you have encoded the balance of 210,000 pesos, right? And then you remember that you recorded a purchase of equipment here amounting to, how much is that? 15,000 pesos office equipment. So when we go, let's go back to the general journal. So the balance is 225. Okay. 220. Oh, the balance is 210. Okay. So let's add up everything. So 210. Okay, 210,000 plus the one you recorded in the CDJ, 15,000 pesos. So that's a total of 225,000. So meaning this amount that we've computed will have to multiply it to 10% for us to get the annual depreciation expense. Okay, so that's 225,000 times 10% here. And then from there, we will get the annual. Okay, it's for the whole year. If you wanted to get the monthly, you just have to divide this one into 12. So 1,875. So we have 1,875 debit and credit. Last item to be recorded in the general journal is the percentage tax, which is 3% of the service revenue. So how do we get the service revenue? We check the revenue journal. Remember, we record there the service revenues and then the cash receipt journal. So we go over here, check the service revenue. How much is that? 50 plus 100 plus 70. So that's 220,000 pesos. And there's another one here, service income. So 20,000. So that's 220 plus 20, so that's 240,000 pesos. So how do we compute for the percentage tax? So 240, okay, we just simply multiply it to 3% based on this additional information. So that's 72,000. So 72. So to record percentage tax. Debit percentage tax expense. So PR number is this one, 530. And the accrued percentage payable is 206. So 530, 206. And then that's the end of your journalizing transaction. So now we have to proceed in posting transaction. So let me just highlight everything so we know we were able to tackle or discuss it. So once you're done with this, you can now proceed in the ledger or posting of transactions. So how do we do that? We have to make sure first that you were able to sum up all the accounts in revenue journal, cash receipt journal, and cash disbursement. So how do we do that? Let's just add everything. 50, 170, total is 220,000. And then we put the post reference number for service revenue. In this case, service revenue is 401. So we put 401 here, not on the left side, not on the right, not on the top. It should be below the amount. So meaning this 220,000 pesos reflects the service revenue, which has the PR number 401. Same scenario here. So 50, 100 plus 70 is 220,000 pesos. Amount, okay, that's a total. So post reference is 103. It's here, AR, because it's AR on the debit side. Service revenue credit. So we go here. No need for you to um no need for you to sum up everything here. Let me just highlight this one. I think I forgot to highlight it. But we recorded this in November 20, RJ, November 20, invoice number, RJ, Clear Incorporated, and then balance is 70,000. We debited 70,000 here. So just to make sure everything's recorded and highlighted. Okay, so let's go back to summing up everything. 40 plus 50 plus 75 plus 100, 265,000 pesos. For the service income, we only have 20, so balance here is 20. For cash, 40, 20, 50, 75, 100. Total is 285,000 pesos. And do not forget to put the post references, which can be found here, 103. Okay, AR, credit. Take a look at the debit or credit, right? Okay, service income. So 401, it's here. Service income or service revenue, it's just the same. Cash debit, 285, 101. So you have to put everything on the bottom part, not on the top, not on the right or left. So you have to make sure everything has been summed up already. For the cash disbursement, let's just do the same thing. For salary, per column, okay, per column. So for salaries expense, we have 24 plus 24, 48. SSS, since since this are a combination of positive and negative numbers, we'll just use the basic math. Which one is higher? 5,000. Okay, 1 plus 950 minus 5,550, that equals to 3,500. And then the post reference here. Withholding tax, 800 minus 800 is 0. Post reference for withholding tax is 202. Where is it? 202. Withholding tax payable. So supplies expense. So it's only one transaction, so 507 is here, supplies expense. Input VAT 1980. 180 plus 18 is 1980. Account number is 108. Input VAT. Input VAT. And then the expanded withholding, just the basic math, 500 minus 500 is 0. Post references is 203, so it's here. And then cash credit, just have to add everything, 1680, 16, up to this amount, 10,000. So total is 103,780 pesos. So cash account number is 101. We have to make sure everything has their corresponding post references or account numbers. For this one, we were already able to reflect it while we're recording the transaction, right? So you have to record this as well. So now you're good to go for the posting transaction. So how do we do that? We go, okay, let me just split my screen. Okay, you have to open the ledger first. For the ledger, I think we can just put it on full screen. The technique here is to go over each account. So meaning 101, the next is 103, next is 108, 120, 121. Okay, here are the account numbers. You have to go each of the following accounts to make sure that we were able to record everything. In this case, for cash, so let us see in our 4 journals if we record 101. So you see, it's going to be so easy for us to look for the account because we already reflected the references. So in the ledger, it says 101. We just have to look for the 101 PR. So 401, 103, 103, 401, 101. So we record cash debit, but not, you don't have to record it each. Okay, we have to record the total. That's why we have the total here. And by the way, for the peso sign, again, please remove all the peso sign on the following transaction. Only on the first item, there would be peso sign. And the totals, there should be peso sign. But for the rest of this, you shouldn't have the peso sign. For this one, it's okay because it's just the first and only transaction here. So it should contain peso sign and for the totals as well. So again, 285,000 pesos, 101, we recorded here, 101. So we debited, okay, let me just put my screen on split so you can see it. Okay, 285 cash debit. So we will use the date, the last date of the month because it's the consolidated transaction for the whole month of November. So 285, November 30, we recorded where? In cash receipt journal, page 1. So we debited 285,000. So the balance now is 540,000 pesos. Why? Because we have a beginning balance, 255. The normal balance of cash is debit. So when we debit something, we add it together. 255 plus 285 is 540,000 pesos. So let me just highlight this one. Okay, maybe later, because it will take a while if we highlight it one by one. So next, 101. Let's check the CDJ because I remember we have 101 here on the last part. Okay, we have cash 101. Make sure that you were able to mark, let's say, a small check, an underline, or a circle for you to remember that, oh, I recorded this one already. Okay, any signs or symbols that will do, a small one. So the total here is 103,780. We recorded it in the CDJ. So in this case, CDJ. So date is November 30. We recorded in CDJ. And then we credited, this time we credited cash. So 103,780. So since we have a balance of 540, and then we credited an amount of 103,780. So we deduct it. 540 minus this one is equals to this one. So now we have a cash balance of 436,220 pesos. And then we'll just do the same thing for the rest of the accounts. So let's check the AR 103. So 103. We go to the revenue journal account. Here's the revenue journal. We have a 103 here, so 220 debit. So let me just highlight this one again. Okay, so November 30, we recorded in revenue journal, RJ1, we debited AR 220. So debit 220, balance now is 335. Why? Because we have a beginning balance here, right? Earlier, we recorded it. 115,000 plus 220, that gives us 335,000 pesos. What else? Let me just highlight this again. We recorded in CRJ, so cash receipt. So we have an AR here, 103, account 103, AR. We credited an account amounting to 265. So we put it here, the date is 30. We recorded here in CRJ, credit, credit accounts receivable. So it's here on the credit column. So 335, normal balance of accounts receivable is debit. So when we credit something here, we deduct it. So 335 minus 265, that gives us 70,000 pesos. Okay, I hope that is clear. So let's just do the same thing for the rest. So 108, let's take a look at the CDJ. Because we have no 108 here, here as well. For sure, in cash disbursed we have 108 here. So we have a balance of 1,980 pesos. So date is November 13th. CDJ, we record it here in CDJ. Debit, it says debit here, and then the balance now is 1,980 pesos. So highlight again. So next, office equipment. Office equipment, we have 120, 120. We have 120 here. There we have it. So 15,000 pesos. We debited for 120. So 120. When is the date? Not November 30, okay? Because we have a date here. It's a separate account. We only use November 30 date for this ones because it's a consolidated amount for the whole month. But for this one, it's a singular transaction. So in this case, November 5. So 120 here. November 5, we recorded it in CDJ. It's here. And then we debited an amount of 15,000 pesos. So now the balance is 225,000 pesos. Next, we have accumulated depreciation. Okay, let's see. Accumulated depreciation, we record it here. So in this case, where's the accumulated? 121 here. So we have credited 1,875 on the credit side. So accumulated date is here. Okay, account number is 121. For the accumulated depreciation of this equipment, date is November 30. We recorded it in GJ, General Journal, page 1. We credited an amount to 1,875. So we put it in the credit side. Balance now is 19,375. Why do we have the parentheses here again? Because the normal balance of the accumulated depreciation for account 121 is on the credit side. So for us to know if this balance is credit or debit, we put the parenthesis for the credit side. So meaning we have a credit balance of 17,500, and then since the normal balance of accumulated depreciation is credit, we add up the credited amount to 1,875. So this one plus this one is equal to 9,375 pesos. Next, 201. Do we have 201 here? There's none. Okay. We check the CDJ also. Definitely we don't have payables here. 201. Let's see. Okay, there's none. On this one, 201, there's none. 201. 201. Okay, there's none. So we have to move forward to the next account. Withholding tax payable. So we recorded something here in CDJ 202. So let's take a look at 202. 202 here. Okay, so it's a zero account. So just input it here. We can just leave it as is since it's a zero amount. But if you want to, you can just type it in here 0. But for me, there's no need. So next is same here, expanded withholding. It's a 0 amount. Okay, let me just put this back here. Yeah, I'll remove this one. Oh, okay, this one is yeah. I'll remove this one and I'll put an underline here. Okay, so we know it's the balance. For expanded, no need as well. I'll just put an underline here and I'll remove this. Why? Because there's no amount to be recorded here in the first place. Because 203, yes, we do have 203 here, but it's a zero. It has zeros. Okay, 0 amount. Let's move on to the next transaction, 204. Do we have 204 here? Yes, 35. So debit or credit? So it says here there's no parenthesis, so it's a debit. 204 debit. November 30, 204 debit. New balance is 2,050. Why? Because we have a beginning balance of 5,550, and then the normal balance of payable is credit, right? That's why we have the parenthesis. But we debited something. So 55 minus 35 is equals to 2,050. So that's the normal balance. Next, we recorded in General Journal 204. We have 204 here, here. So another credit. So we record here November 30 based on the date here, and then credit 35. So you put 35 again. So credit side. So now the balance here plus 35 because it's a credit. That's a normal balance of SSS pag-ibig payable. So we add up this two. Total of 5,550. Okay, next 205. 205 here. Utilities payable. So that credit, utilities payable. Okay, let me just take a look at the other ledgers or journals. Yeah, do we have 205 here? 205. 205. We have two here. So we recorded separately. Okay. November 10. So we have November 10 here. We recorded in CDJ. We debited it here. 205, 800. So now the balance is 38 minus 800. That's 3,000. Why? Because the normal balance of payable, again, is credit. We debited something, so we have to deduct it. 38 minus 800, 3,000. In this case, we have another 205. So we have to post this as well. So 3,000 pesos, November 10, we recorded in CDJ. Another debit, 3,000 pesos. So if we have a balance of 3,000 minus debit account, 3,000, so that's 0. Do we have other 205? I think, yeah. Let's check the general journal. 205 is here and then here. Okay, so 205, 500. We recorded here in GJ. 500 credit. So take a look at this. Credit. This time it's credit. So now we have a balance of 500 pesos. Okay, 0 plus 500 is 500 on the credit side. So another one, we have 205 here. 2,000. So 2,000 pesos we recorded in GJ. So we have GJ1 here. 2,000 credit amounting to the balance of 500 plus 2,000 is 25. So make sure everything is recorded. Next, we have accrued percentage tax payable. Do we have 206 here? Yes, we have here, 72. So that's on the credit side. So accrued percentage tax payable, credit. New balance is 13,950 because we have a beginning balance. Normal balance of a payable account is credit, so we have parentheses. So since we credited something here, we add up the two. So total is 13,950. Okay, for this one, 301, we haven't recorded anything yet. That's under 301. This will be post-closing, so we haven't recorded this one yet. So don't mind it for now. Because again, it's a complete answer already. Everything is recorded here. That's why we're highlighting the ones we recorded already. So 303, did we record here 303? Not yet. We don't have 303 here rather, right? So next. Okay, I think we recorded 303. Sorry, I overlooked. CDJ, 303. Okay, there we have it. So we recorded the same way. November, the date, amount is 10,000 debit. And then you compute for the new balance. Okay, and then next, 304. You have 304. We recorded the same way. 10,000 pesos withdrawal. Debit. Balance now is debit, November 30th. What else? 401. 401. So we recorded here in Revenue Journal 401. It's here. Credit side. Based on the Revenue Journal. So 401, month of November. Okay, date. Where did we record this? 220,000 pesos. So RJ1. So credit of the service revenue. It's here, credit 220,000 pesos. So now the balance is 220 with parentheses. Why? Because the normal balance of service revenue is credit. And then it says here that we recorded a service revenue credit amount. So we have to replace it here. Credit. What else? We also have here service revenue. So it's a debit, it's a credit account again. So service income 220. So we recorded um last date of the month, November 30. We recorded here in the CRJ amounting to 20 credit. So 20 credit. So the total now is 220 plus 20 is 240. Okay. Next, we have salary expense 501. I think we recorded here in CDJ 501. Let's cross check each post reference account. 501 is here, 48,000 pesos debit for salaries expense. So November 30, we recorded in CDJ debit 48, balance now is 48 pesos. Next, 502. 502, we don't have 502 here. We don't also have it here. So let's check the GJ. 502. Here, we have 35 debit. So November is November 30. Let me just retype it with the month name. Because that's the first transaction, you have to put the month. And then the peso sign should be reflected here as well because these are the first transaction. 35 debit, debit. So balance now is debit. Highlight. Next, 505. Do we have 505 here? None. Let's take a look at the cash disbursement. 505. It's not here. We have here 10,000 pesos debit. So rent expense November 5. This one, November 5. 15, sorry, November 5 here. That's 505, 10,000. So November 5, 10,000. We recorded here in the cash disbursement. So we say CDJ. Okay, balance is 10,000 pesos. What else? 506, utilities expense. I think it's here. 506. 506, we have 2. So we can just total this one. So 506, 500. Okay, we have 500 and then 2,000 pesos debit. Okay, November 30. So we record it here. Okay, we can just separate it so that we know this one is for water, this one is for electricity. So we use November 30 here. Okay, both of them are debited, 500 and then 2,000. Both are recorded in GJ. So the balances are 500 plus 2,000 to 5. Okay, next, utilities expense 507. 507. Okay, take a look at this. We have to make sure that everything with post reference here are recorded in the ledger. Okay, that's the goal here in posting transactions. So in this case, supplies expense debit 15. Supplies expense debit 15. New balance is 15. Let me just change the date here. Again, first transaction should be with the month name, November. Next, 520. 520 is here. 1875 debit. So 1875 debit. Balance here. Where did we record it? In GJ. So date here is November 30. By the way, everything's going to be recorded in handwritten during your national assessment. You have to practice this in actual paper. You have to print it and then practice on your own. Okay, next. We have 530. 530 here. 72 pesos. 7,200. So debit 72. So debit 72. Balance is 72. We don't have 72 here. Okay. By the way, you have to check all the journals, okay? If you have 530 here, well, let's see. 530, there's none. 530, there's none. So we check here. 530, there's none also. 530, 530. You have to cross-check all the four journals. Revenue journal, cash receipt, cash disbursement, and general journal. So yeah. Next, income summary. We haven't recorded anything here yet, so let's just proceed. So now you're done with post-closing trial, post-closing transaction rather. So in your paper, you were able to encircle everything. Okay, same here, encircle or underline or check, whatever you prefer, as long as you marked it as recorded already. So once you're done, we have to go to the worksheet. So this is how we do it. Open your worksheet because in your assessment, everything is on blank. So you have to put first all the balances. Okay, the accounts. So let us look for this one. For me, I prefer my students to record the account number along with the account title. In this case, where's the okay, chart of account is here. You have to copy paste everything. You can use a shortcut term like AR, you can do that. Input, that's okay. As long as you know the accounts that you're referring to, then you can put that because in your assessment time it's limited. Okay, so you can put a shortcut here for the account title if you find it so long to write it in a handwritten form. So you just have to put everything from here, the chart of accounts. So 101, cash, 103, accounts receivable, so on and so forth. So make sure that you are able to incorporate everything here in the worksheet. Because again, it is blank paper. You have to put all the accounts here. Unless the TESDA will provide already the account numbers. So much better. You just have to input all the accounts or the amounts here. So let us focus first on these three. But we'll go over the adjusted balances first. So let me highlight it in different colors so you won't be confused which one I'm referring to here. So unadjusted for the yellow ones, adjustments for the blue ones, and adjusted trial balance for the green ones. So let's start first with the cash. So let's open the ledger. The basis here is the ledger. We're now done with the posting transaction. We'll now be preparing the trial balance. So how do we do that? So let's check each account and reflect all the balances on the unadjusted trial balance. So for the adjustments, these are the transactions we recorded under general journal, just like this one, GJ1, okay, 1875. So another one we have GJ1, 500 plus 2000, so that's 25. So we record it here. So don't mind the GJ transactions here yet. We'll just focus on the transactions before the general journal adjusting entries. So in this case, 436, we just copy paste it here for accounts receivable, 70,000, input VAT, 1980, debit side, accumulated depreciation, it's on the credit side. The balance here is 17,500. For the unadjusted, why didn't we include or reflect this? Because we have recorded in the adjustment, it should be recorded here. So for now, focus on the unadjusted first. Let's consider the balances before the general journal entry. So what's the entry before this? So it's this one, right? So 17,500 pesos, meaning this balance is not yet adjusted. Okay, so that's why it's called unadjusted trial balance. Same here in 202 account, okay, 800 pesos, 202, 800. For expanded, we have 500 pesos. For 204, we have this one. Again, this is the balance before the adjusting entry we made here. Because this one is already adjusted, right? If you will notice here, It's the adjusted 5,500 because the adjustment here is 3,500, and then the balance before that adjustment is 2,050. So that's the essence. Okay, so for now we focus on adjusted trial balance. So we put the balance here 2,050. Okay, and then utilities payable, since we have none, 0. So that's 0. Accrued percentage 6,750 before, again, before the GJ1. So balance here 6,750. Capital, okay, we have 272. Don't mind this yet because we haven't recorded anything here. The ones we have recorded already are the ones in yellow, right? So in this case, don't mind this one because it's already a complete answer. So don't mind it yet. So unadjusted is 272,550. Same here with A paras capital 272,550. Drawing is this one, balance 10,000, 10,000 as well. 240 service revenue, this one. And then salaries expense 48. So for 48, SSS, there's none, 0. Rent expense 10,000, debit. Supplies, utilities 0, 0. Supplies, we have 1,500. Again, before any GJ transaction or general journal. It means adjusting entries. So unadjusted is 1,500 as well, and then depreciation there's 0, 0, 0. So now let's focus on the adjustments. So where do we have to check? So let's go over the general journal. So it's much easier for us. Yes, you can look here already because we were able to post everything already, right, in the ledger. For me, I would suggest you to focus on the GJ adjustment. Okay, but in real work setup, we base it here in the general journal. But for the assessment purposes, we base here. So let's go over each account. We don't have 101, 103, none. The first transaction is 121. We have 121 here. It's here. Debit, credit side. So credit adjustment 1,875. So now since we adjust 1,875, we have an unadjusted 17,500 credit, and then we add credit 1,875. The total amount is credit 19,375. That's also the same amount that we have here in the ledger, correct? So 121. 121 is here. See, the unadjusted is 17,500, right? But we adjusted something here amounting to 1,875. So now the new balance is 19,375. So meaning unadjusted, any adjustments that we make or recorded, the adjusted now is here. The same amounts reflected in our general ledger. I hope that is clear. Okay, let's move on. Next adjustment we have the 5. So 204. Make sure that everything here are recorded here in the adjustment. So 204, we have 35. So credit 35. So 35 credit. If you have unadjusted credit, add the 35, we have adjusted 5,550. So let's take a look if we were able to compute it right. So 204 account, it's here. So we say the unadjusted is 2,050, right? But we made an adjustment amounting to 35. So 2,050 credit plus credit 35, that gives us 550. Do we have the same balance here? Yes. So that's the essence, again, of these transactions. Next, we have utilities payable. So that's account number is 25. It's here. How many 205 we have? 205. It's just one. Okay, 205. 500 plus 2,000 is 25. So we have an adjusting NP of 25. So unadjusted is 0, but then we add the credit amount for the adjustment. So we have the adjusted 2,500 pesos. So let's check again the ledger. So 205 account, 205 account is here. Do we have the same balance? Yes, because the unadjusted is 0, but then we have two adjustments. 500 plus 2,000 is 25. So the adjusted amount is 25 already. So it's just the same here. We'll just do the same thing across all the accounts here. So adjustments, we have 502. Again, we check it here. 50, we have 502 here. Yes, 35. Adjustment 35. From 0 plus 35, we have 35. For the next adjustment, we have utilities expense. 506 we have here. We have also here. So that's debit 25. So 25 from 0 plus 25 is 25. Next, 520. Here, debit 1875. Debit, debit. So 0 plus 1875 equals 1875 debit. Lastly, we have 530. 72, debit, debit, 72. 0 plus an adjustment is will give us the balance of adjusted 725. 72 pesos. So make sure that everything are balanced. From the debit and credit of the unadjusted, 436,200 plus 70 plus 1880 plus 225 plus so on and so forth, it should be 812,700. It should be balanced here. So 17,500 plus 800 plus 500 plus 250 plus everything. So it should be balanced. So debit and credit should be balanced, same with the adjustments. Why? Because all the debits and credit here have the same amounts. Should be balanced here as well. So we have to add up everything, add up here as well. So balance should be balanced. Okay? So everything that's recorded here in the unadjusted, you see you have a balance amount. So you must have a balancing amount here as well. So add up everything from 436 down to 72. Same with the credit. It should give you the balancing amount. So if in case you don't have a balance amount, so meaning you did not balance, so you have to cross-check everything. What's the difference? Okay, let's say you have computed 817 here, 775. So you have 817, and then for the debit, we have 827. So you have a difference of whatever amount. So you have to look for it. Cross-check if you were able to post all the references here. Okay, so that's one way of checking. Okay, once you're done, you can now prepare for the statement of comprehensive income and then statement of financial position. So in this case, we'll focus here on the adjusted. So let me just hide this one. And then, now for us to complete the entire worksheet, because this is the worksheet, right? Let me just unhide this one first. Okay. Okay, this is a worksheet, so you have to complete everything. So this details, these columns, particularly for statement of comprehensive income and statement of financial position, the details to be reflected here will help us prepare the financial statement. So it's really important for us to prepare and complete the worksheet. So for now, let me just hide this um column first. Let's focus on the adjusted trial balance. Okay, so how do we prepare or complete the worksheet? So for the statement of comprehensive income, from the word itself, comprehensive income, we will break down all the debits and credits related to the comprehensive income. So what are those? When we are computing for our income or profit, definitely we'll have to compute for the service income that we've um collected or we've earned, right? But then again, there would still be, costs and expenses related to that service income. Okay. And we have to deduct it from our profit for us to know how much we were able to earn. Okay. So in this case, the credit is 240,000 pesos. So that's the service income. If you will notice, your debits and credits are not yet balanced. So for the credit side, you have 240,000 pesos, right? But when you compute or sum up all the expenses that you were able to incur, that would only give us 74,575. So what happens if it's not balanced? So in theoretical context, you have a revenue amounting to 240,000, and then you only incurred expenses amounting to 74,575. So that means you have gained a net profit amounting to the difference of these two. So 240 minus 74 or 75, that will give you 165,425. So that means this is the earned profit of your company. Okay, when you add it on the debit balance, okay, it will give you a balancing amount of 240,000 pesos. So you will use this detail later on. Okay, next we have to prepare the financial position, or what we call the balance sheet. Okay, so for this one, we have to make sure that debits and credits are both balanced also. So given that the statement of financial position is also known as the balance sheet, we have to reflect all the assets, the liabilities, and then all the capital or equity related accounts. So what are those? So we have to include of course, what are the assets? Cash, accounts receivable, office equipment, input VAT, office equipment, and then of course accumulated depreciation. It's a contra asset account. It's still related to the asset account, right? And then a payable, withholding, expanded, SSS, utilities, accrued payable, and all the capital or equity related transactions. So we have the beginning balances, right? The capital GABAD, A plus capital, and then we have deducted the drawings. So meaning since they withdrawn cash from the company, we have to deduct this drawing to their capital. So it's still related to their equity or capital, right? So both of them withdrawn 10,000 pesos. And then of course, we have to include the net income because later on we will add this net income. We will divide it by two because we have two partners and then they agreed to share the profits and losses equally. So we'll divide it into two. So these are the figures that we need to reflect in the financial position. So you just have to copy paste here the accounts. Okay, it's here. It's here also. Excuse me. And then the 800, 500, and then 5,550, 25, 30,950, and then the balance is here, here. Okay. If you will notice, if you sum up all the accounts, it will only give you 587,775. Okay. But for the debit account, you have 436.70 up to this one. You will compute 753,200 pesos. Now, when you try to get the difference between the two, it will also give you the same amount that we were able to compute here. It's 165,425. And then, since we're locking here on the credit side, you will put it here on the credit side section as well. So that will give us a balancing amount, 753,200 pesos. So that's how we prepare the statement of financial position here in the worksheet. And these details will really, really help us, makes our lives easier to prepare the financial statement. So then again, where do we get the balances or the amounts here? So we just copy paste it here. Okay, we put everything here, credit, credit, debit, debit. And then we just sum up everything. So now we're done with the preparation of worksheet or the trial balance. We can now prepare the financial statement. And I'm telling you, it's going to be so much easy to prepare financial statements. Okay, so let's go to the financial statements. Take note that we have to prepare first the income statement. And then next to that is the statement of changes in owner's equity. And then after that, we can prepare now the financial position or statement of financial position. And then lastly, statement of cash flow. I wouldn't recommend you to prepare the SEF first before the SFP or before the owner's equity. You have to prepare it chronologically because it's a domino effect. Once we were able to compute the income or the loss of your company, you can now update your statement of owner's equity. If you were able to update it, you can now prepare your balance sheet, okay, or the financial position. And then you can lastly prepare this already for statement of cash flow. Okay, I hope that is clear. So how do we prepare the income statement? So let me just split my screen here and then let's open the worksheet. I am recommending or highly suggesting everyone to use the worksheet already. So for now, let me just hide this one so we can focus on the, okay, statement of comprehensive income and the statement of financial position. So in the preparation of statement of income, the name is of the company is here, this name of the statement, and then the month. So it says here for the month of end November 30, 2020. So in the national assessment, it is blank in nature. So you have to know what are the accounts related to the income statement. You must know how to prepare the income statement. So what are those? Remember the accounts that we use here, the statement of comprehensive income. So you will use the service revenue, all the expenses. Just like here. Okay, the service income is here. And then the operating expenses are also listed here, just like this one. Okay, you just have to copy paste everything. So for me, I'm suggesting everyone to memorize all the accounts reflected in the financial position. So for the income statement, these are the accounts that we'll be using. So if you forgot to what accounts that you will list here, just take a look at the worksheet that you have. So, okay, and then you will remember, okay, we just have to put the income statement here or the service revenue here or service income, and then we have to list down all the, what do you call that again? Operating expenses. So list down all the things here or the amounts, and then you have to put the total for the operations expense. So sum of everything, put it here. So 240 minus 74,575. The one you computed here is just the same here. Okay, 165,425. So it's just the same here, right? So now, since this is the net income of the company, then we have two partners, we have to compute it by dividing it by two. So for the partners, they will get 82,712 pesos point 50 centavos each. Okay? Because they agreed to split the income and losses equally. But if it's the other scenario, let's say 70% for Abad, 70% for Paras, I mean 30% for Paras, you can compute it accordingly. Okay? Once you're done in the preparation of income statement, that's how easy it is, right? When you were able to complete the worksheet. You can now prepare the statement of changes in owner's equity from the word itself. Changes in owner's equity or capital. If you imagine if you have a company, you have a beginning balance, you have invested. Okay, I invested 272,550. Same with my partner. Our total balance is this one. But we have withdrawn, okay, 10,000 each. So we have to deduct it because we claim it back, right? Okay, we claim it back. So less the 10,000 pesos each. So that's 20,000 pesos deduction. And then for the whole November, we were able to have earned a profit amounting to 82,712.50 each. So we have to add it back because that's an additional capital for a company, for us as partners, right? So we have to add back this one. Total is this one. It's just the same here, right? Same amount, 165,425. So now, what is our updated capitals or equities? So if I am Giabad, I have initial investment, and then I withdrawn, I have to deduct this, and then I have earned this income. So now, mm, so you have to like deduct 10,000 from here, and then add this back, and then the total balance would be 345,262.50. Same with a paras. The total is here. 545, 100 minus 20,000 plus 165,425. Total is 690,525 pesos. This reflects the flow, okay, or the movement of the accounts related to our capitals or the equity. So that's how it can be explained. Okay, in statement of owner's equity. Now we were able to compute for the income, and then we were able to update what is the balance of the current capitals for each partner. We can now therefore prepare the balance sheet. Okay, that's why I told you earlier it's a domino effect in the preparation of financial statements. Go first with the income statement so that you know how much you will add here. Okay, and then when you get the balances, updated balances of each partner's capital, you can now prepare the statement of financial position. Because in statement of financial position, we reflect here the assets, the liabilities, and then the equity, correct? And these amounts are, again, blank in nature. Okay, you will have the template to be provided by TESDA, and then you have to memorize what are the accounts to be reflected here. Okay, so for if you forgot, just in case, oh, I hope not, okay, you have the reference here. So what are the accounts that I need to reflect again in my balance sheet or statement of financial position? It's just the same here. The assets, AR, input VAT, and then accumulated depreciation. Okay, all here. Cash and accumulated depreciation. Why is that accumulated depreciation is on a separate column? It is because it's a contra asset account. So 225 should be deducted with 19,375 because it's a depreciation. So meaning you bought this equipment at 225,000, but then a year after we have depreciated it with an amount to of 19,375 pesos. So we have to deduct it. So 436 to 20 plus everything minus this one, that will give us this total amount. So again, total assets should be equal to total liabilities plus equity. So meaning when we add this two, it should balance to this one. That's how we know that we were able to compute for the correct amounts. Okay, so now we have the total assets here amounting to this amount. Let's compute for the balances of the liability. So we have 850, 500, 550, 25. Okay, up to this amount, 3950. So total liabilities are, okay, you have to compute that. So we have 23,300 pesos. And then we have the capital, updated capital here. 345, 345 to 62.50. So that's the same amount that we will reflect here. 345, 345. So total of this is 713,825 pesos. Are we balanced? Yes. So if question, ma'am, what happened to the amounts here? Why didn't we use this? If you will notice, these are the amounts that we were able to use in the computation of statement of owner's equity. The beginning balances are here, the the withdrawals, and then of course the revenue we were able to compute. So let me just highlight this one. So so you know where the accounts are coming from here. Okay? I think that's um that's the end of the preparation of financial position or balance sheet. You cannot therefore proceed to the statement of cash flow. Actually, this one is not really dependent on the previous financial statements that you were able to prepare because you can prepare this one and then you can proceed here, income statement, owner's equity, and then statement of financial position. But generally, we just prepare it on the last part. But you can prepare this first before everything else. But for this, in this case, income statement, owner's equity, it should be in chronological order, right? So SCF or statement of cash flow. Of course, we're talking about cash here. So we have to use not the worksheet because it doesn't have the breakdown of all the cashes here. Okay. Now we go over the ledger because from there we have the balance, right? And the ledger, let's go over the cash. Okay. So in the assessment, you have to memorize everything because you don't have anything at all in the financial statements. You'll be the one to put the accounts and then the amounts. Okay. So for cash, statement of cash flow, it's a statement that reflects all the inflows and outflow of the cash of the company. So of course, you have to reflect first the cash inflow. How much did we collect this month? So collection is here. We recorded it in the cash receipt journal. Those are the cash that we were able to receive, right? 285,000 pesos. So net cash inflow is 285 pesos. What about the accounts or the cash that we were able to disperse to deduct in our payments? So where did we record it? In the CDJ. But as per TESDA's formatting or template, we have to break it down for the cash outflow. So we go over the cash disbursement journal. And it's just so easy because it's already breakdown here. So let me just hide these columns for now. Okay, let's hide it for the meantime. If you will notice, it's just the same amounts that are recorded here. 1680, 688, 951355, the 800 plus 3000. It's just the same because both of these are utilities, right? If you will notice here, it's summed up already. Payment for utilities. So 38. But you can just, separate it if you prefer to. Then the salaries and then the withdrawals. So everything is here based on the CDJ. So just have to copy paste everything. Okay? So break down all the amounts here and then it depends on you on how will you state it here. But since this is a payment for unique bookstore, so it's a payment for supplies, this one is a payment for an office equipment, this one is a payment for rent, this one is a payment for taxes, so on and so forth. You can compose your on your own here. Okay? As long as it is understandable that this is the transaction happened here. So you have to compute for everything and then just sum it up. So the net cash flow is 103,780. If you will notice, it's just the same balance here, right? If you check the ledger as well, it's just the same amount here. Oops. What happened here? Okay, CDJ is here. 103,780. So inflow, you have 285 minus 200 minus 103,780. So you have a net increase because this is higher compared to this one, right? So you have a net increase of 181,220. Okay, but you have the beginning balance of 255,000. So we have to add it together. 181, 220 plus 255,000. That gives us to 436, 220. Isn't it the same amount with the cash account we were able to compute here, right? So that means you were able to compute everything correctly. But that doesn't stop here. Okay. Once you're done the preparation of financial statements, well, you're almost done. Okay. So you can now proceed with the preparation of closing entries. So GJ2. So let me just rename this so you won't be confused. GJ2. General Journal page 2. Because this is where we record all the temporary accounts that we will be closing. In the books of November, we have to close the temporary accounts. Okay, so what are those? Those are the withdrawals. If you look at the worksheet again, we have to close all these accounts. Okay, I'll just put it on bold so we don't have to change the colors. So we have to close the service revenue, okay, because this reflects the revenue earned on the month of November. So we don't carry it for the next month. So 240, the revenue, all the expenses should be closed as well. And then how do we do that? So since the normal balance of service income is credit, right? For us to close it and put it on zero, we have to debit revenue. Okay, so that's why we have a debit here, 240,000 revenue. And then the date here, of course, the ending date should be November 30. For this one, it should be 30 only, not Nov 30 or November 30. Okay, again, for the amount 240, and then, of course, the PR number. Where do we get that? The chart of accounts. Okay, where's the chart of accounts here? Let me just scroll. Okay, here we go. So let me just copy paste it here, I think. Okay, so we have the reference. So again, you have to put, it's like going back to journalizing transaction. You have to journalize the closing entries. Okay, so you have to put all the post references as well. So when you record service revenue, debit, post references is 401, service revenue 401. For the salaries, for the expenses, let me go back to the worksheet. If the expenses are debited here and we wanted to zero out everything, we will now credit all of it. Okay, that's why it's on the credit side. Our goal here is to zero all the revenues, the expenses, and then the withdrawals. Okay, so what happens? Okay, so we put the salaries expense, we just copy paste everything here. Okay, write it down here and then put all their corresponding references. Salaries expense 501, SSS 502, so on and so forth. Just put all the references and then copy all the amounts on the credit side. So we will zero out everything. If you will notice, 240 minus all of this has a balance of the computed net income of 165.45, right? So we will put it here, and then we use the income summary. For income summary, we don't have the post references for that, but we have to record it here. So as we make sure that everything is balanced. And then once we're done with this, we have to create an explanation to close income and expenses accounts. Okay, those two are the first things that we need to close. Again, income or revenue, and then the expense account. Okay, and then we use the income summary for the difference. Okay, all right, because the revenue is higher than the cost that we incurred. Okay, so we have to balance out everything. And then do not forget the explanation. And then how do we close this? How do we close the income summary account? So if this is credited, we will now debit it, right? So from here, from credit, we will now close the income summary account to the capital. So income summary, debit, okay, from credit, we put it in the debit, and then we add it to the capital, right? Remember, these are the amounts that we were able to add in the comprehensive income. Let me just show you very quick. In the financial statements, here are the amounts that we added to the capitals, right? So there. So a rebalance, 165, 82, 82. Yes. And then the explanation is to close income summary to the capital's partner or to the partner's capital. And then next one that we need to close is the drawing accounts. So if we debited the drawings here, we have to put it on the credit. So we have to deduct of the capital. Okay? So G Abad capital 301, APRS capital 302. So debit 10,000, 10,000. And then we close the accounts. G Abad drawing, APRS drawing, credit. Okay, so we zero out the drawings to partners capital. If you will notice, let's go back to the financial statement. These are the amounts that we deducted, right, in the capital. So I hope you are getting the point here. Okay, that's all for the closing entries. If you will notice, when you go back to the worksheet, you were able to close all these accounts already, right? And then we were able to get the updated capitals, right, earlier. So now, once you're done with the journalizing, closing entries, you can now close each. So how do you close it? It's just going back. After journalizing transaction, what do? We post transactions, right, in the ledger. So if these are the journals, we go to the ledger and then we post it. If you will notice, we have closing accounts here. So this is where we get all this. So let's say 401. You have to find the 401. 401. Okay, here. If you will notice, we have a closing entry here, GJ2, right? So this is where we record the closing entries. So debit service revenue 240,000. In the service revenue account in the ledger, we have closed November 30 closing. Okay, close, you can use that. GJ2, right? We recorded in GJ2, meaning General Journal 2, page 2. And then we debited an account. So meaning, if you have a balance, credited balance of 240, and the norm, you know that the normal balance of the service revenue is credit, right? So 240 minus 240 is 0. So goal here is to zero out the accounts from drawings up to all the expenses. Okay, and even the income summary, it should be zeroed. And all the zero accounts should be double ruled, meaning you have two lines under here. And everything should be zero from the drawing up to the income statement account. That is our goal here. Okay, next, 501. Let's take a look at this one. 501. So you recorded the credit. So 501 is here. Okay, you recorded it on November 30, right? And then 501 credit 48. Credit 48. Closing. We recorded it in GJ2. So you have a balance of expense 48,000. And you know the normal balance of expense is debit, right? But you credited it this time. So 48 minus 48, that gives us 0. So just the same process with the rest of the accounts here, 502. So we have closing, we recorded in GJ2, we credited 35. So 35 minus 35 is 0. So everything Okay, you have to record it the same way here. Okay, making sure that everything has been closed already. Okay, what happens now? Okay, let's say we were able to close it here until 5:30, percentage tax. What happens to the income summary? So it's just the same. If you credited here, go to the income summary, just put the date, November 30. Again, on every first item, the date should be how should reflect the November, the month, the name of the month. So November 30, closing, you recorded it in the closing entry, GJ page 2, and you credited 165.45, correct? Yes. So credit, credit. So the balance here is credit. Okay. So we have now, okay, so let me just put a parenthesis here because the normal balance of this one is credit. So 165 as balance, credit balance of income summary. Let me just highlight it. Now, in this scenario, you also have the 301 here. Sorry, the income summary here, you debited it. So 165, so closing GJ2 debit. So since you have a credit balance of 165 and then you debited it, it will give us 0. So are we able to close it? Yes. And then making sure that capital is already is also updated 301. Go to the 301. Okay, it's here at the bottom part. 301. So you credited 82,712. So we have to close it. Date, closing. Where did you record it? GJ2. You credited how much? 82,712. So if you have a balance of 272,550, and then you know that the normal balance of capital is credit, right? And then you credited another 82,000 something. So the total now is 355,000 pesos. Next, with 302, you have to make sure that everything are posted also. Okay? So 302 is here. What is here? So 30,000 peso. I mean, November 30 rather, closing. We recorded it in the GJ page 2 and then we credited an amount to 82. So just the same thing. Okay. Next, you debited in 301. Let's go back to the 301. Making sure everything is recorded. So you have debited, right? You have debited, debit, 10,000 for 301. So 301. So you debited here. The new balance now is 355, normal balance of capital, and then you deducted, debited. So minus, so that's 345,262. Okay, if you will notice, that's also the same amount that you were able to compute here, the financial statement. The updated balance for equity of GABAD is 345 to 62. You know, I hope you can see the relationship of all the books that we are recording. Okay, next we have 302. Okay, same scenario here. Where did you record it? GJ2 amounting to debit, 10,000 pesos, closing. And then lastly, we have 303. November 30. Let me just change this one into 30 only, not November 30. Okay. And then GJ2, you credited 10,000. So you have a credit here, 10,000 pesos. So the normal balance of drawing account is debit. And then here you credited it. So that makes us deduct 10,000, 10,000, 0. And then lastly, we have the 304. So 304, 10,000 credit. So balance here is debit, then we credited it, and then that gives us 0. Making sure that everything is 0 here from the drawing up to the income summary account. So from here, okay, you're very much close to the submission of your output to the assessor. Now you can now proceed with the post-closing trial balance. Whatever is left in your worksheet, actually, I would recommend you to use the statement of financial position as your basis. Okay? What are the things left? What are the accounts left in your books? We have the cash. You have to put by the way, it's just like this. Okay? In post closing trial balance, it's just basically blank. You have to input everything. And I'm using the statement of financial position as a basis. You have to input here. So I'll just show you here cash, AR, input VAT, office equipment, everything. Accumulated depreciation up to the capital. So of course you have, since this is a trial balance, you have to put all the references here from the chart of accounts, of course, and then input all the balances here, debits and credit, and you must arrive at the balancing figure. 713, 700, 733, 200, same here. Okay, if you will notice, why is the total balances here are different from here? Because in here, we are computing for the total assets. Okay, here we are computing for the total liabilities and equity. But in this case, we are computing for the debits and then the credits. Okay, I hope that is clear. And that's the end of our discussion. It's the complete end-to-end bookkeeping reporting for the problem GAAP. Now, if you before you pass your paper to your assessor, you have to make sure all the peso signs. Let me just go back to the all the books that we have, making sure that all the dates are reflected like in this format. First transaction should have the name of the month. Okay, the first item should have the peso sign and the total balances. Okay, reflects on everything. What else? And this one, please remove the peso signs here. No need for peso sign here as well. Just the first items. Okay, and then the totals. And then for the ledger, we only put the for the peso sign again on the first items, not here. Remove it, and then for the balance. Okay, what else? Of course, for the credit, please put the parentheses. All the accounts with normal balances of credit. So you have to put the parentheses there. And then do not forget to put all the references. Where did you record it and all? Again, same. The dates should be like this. And then what else? Okay, the temporary accounts from drawing up to the income statement should be zeroed out. Everything should be zeroed, and then you will put a double ruling here. So it's like this. So it should look like this, okay, in your paper. All the zero balances. So let me just change this one for everyone's reference. So you have to double rule, okay, all the zero accounts here. Okay, just like this one. For the cash disbursement, you also have to double rule this one because these are the totals. Okay, same here. Let me double rule this. Okay, what else? So for the worksheet, of course, we have to double rule all the totals. So it should be like this. The final totals, okay? So double rule. Okay, everything should be like this. And of course, the financial statements. So it should be double ruled here. This one, this one, this one, and then all this would be double ruled. Those are the things that you need to check first before submitting your output to the assessor. So for this one, okay, total balances are okay, double ruled as well. Okay, I think we were able to, for this one, no need to double rule. Okay, let me just, sorry, let me remove the underline here because it shouldn't have any underline at all because these are the amounts that to be reflected in the next month. If you will notice, let's go back to the problem. It's it looks like the given ending balance from the month of October, correct? Because this amount that we were able to compute in November will also be the beginning balance for the next month, which is December. See, that's how we carry out and record all the transactions for the month. So we should always have the ending balances for each month because it says here that the company is using, okay, it says here, uh, they are preparing the financial statements on a monthly basis. That's why we have to prepare everything just like the way we did. Okay, so I think that's all for this session. I'll be preparing another set of recording for the merchandising corporation or trading. Thank you, and I hope you really learn a lot in this video. So thank you. Bye bye.